Happy New Hour, everybody. Welcome to Strategy Now here at MarketStream.live. My name is Joseph Cusick from the Cusick Group, securities offered by MoneyBlock, here to give you the strategies that we want to take a look at. Now, before I jump into that, let's take a look at the markets. Currently, right now, we're looking at the Dow Jones 30, trading up about 65 points. Again, looking to set a new high today, up at 19,628. Boy, Dow 20,000. Never thought you'd hear that. The Russell 2000 trading down about $4.60. Those higher beta domestically centric stocks are down a little bit today, trading at 1,382.20. We're also looking at the NASDAQ. The NASDAQ is up 22 points right now at 4884.50. And finally, taking a look at the S&Ps. The S&Ps are up 5 right now at 24.47 We have the dollar still up 56 cents at 101.67.5. Crude oil up 52 cents at 51.36. And gold down 10.30 at 11.62 even. The shiny metal is not shining today. So what do we want to talk about and cover today here in Strategy Now? Well, I wanted to talk about a headline that I saw in an article I read from Reuters that I mentioned it this morning at the opening bell, What's Hot on the Open. I wanted to talk about what would happen if we permanently repeal the medical tax and the impact that would be potentially on these companies. Now, the article was, I felt, pretty well done. It was balanced. But it looks like they're looking to permanently repeal a tax that for the last year has basically been given a holiday. Let's dive into this. The article basically laid out that in 2010, when Obamacare was passed and then implemented, there was basically for the last 5 years, up until 2015, a 2.5% tax that was put on all medical devices. Now, when you looked at the amount of revenue that was generated from that, it came to about $2.5 billion a year. There was about a 2.5% tax, right? That was less than expected. And to put that into context, in 2016, with the tax credits that will be given for Obamacare itself, that's about $660 billion in estimated tax credits. That's coming from the CBO, the Congressional Budget Office. So you can see that this particular tax really isn't offsetting the credits that we're putting forth towards the tax credits for healthcare and Obamacare. So they put a tax freeze for right now for the last year. That's given some small cap medtech companies that are centric here in the United States an opportunity to basically put that money towards jobs, maybe some research and development, so on and so forth. Is it been a huge impact, or is there an anticipation that this is going to change the environment? Not necessarily. As a matter of fact, there has been some reports from some government agencies that the impact is going to be nominal. But the point being is that this fits Trump's agenda. In other words, he's going to be able to have another headline saying, we're cutting taxes, we're potentially creating or keeping more jobs. And the bigger one, the one that wasn't really covered in great detail is the fact that these big cap, large cap medtech groups, they could actually now see an advantage of repatriating a lot of the capital and resources that they moved offshore when this tax and other taxes were put on the books because of Obamacare and other types of legislation. Once those are removed and repealed, most likely permanently, based on what Trump wants to do, that could get a repatriation of quite a bit of assets from these large cap medtechs. So let's take a look at 4 names that I think you can put on your radar and start to watch if you don't already have them into your portfolio. And we'll talk about some strategic approaches that you could potentially implement when and if or when, whatever you want to put into that order, a potential permanent repeal of this tax could be. One of the biggest names that I want to talk about, probably the biggest name, is Medtronic. Now, Medtronic is technically, 2 years ago, it moved its headquarters over to Ireland. They did what was called an inversion deal. They shifted the U.S. company's base over to Ireland, obviously for tax purposes. But the base of operations is still run out of Minnesota. So I looked at that and I said, well, this being probably the largest cap med tech stock, they make pacemakers, a whole plethora of things. Ticker symbol's MDT. The stock is trading up about 1.5% today at 73.21, kind of on these headlines and the positive notes that have come out on healthcare in general over the last couple of sessions. So I said, all right, if we could have not only the repeal of this tax, which could help them considerably, also they could also see some advantages of moving back from Ireland to the United States, to the headquarters. There could be further tax implications if they do that could work in their favor. This could be a big opportunity for not only Medtronic, but maybe some investors in Medtronic or someone looking in this space. So MDT's options that are expiring in January 20th, which is right around the inauguration, are pricing in the potential for Medtronic to move up or down about $4.52. You're looking at basically about a 5%, little more than right, almost between a 6 to 7% move right now in the stock being priced in there. With that being said, I said, well, let's take a look at what some of the technicals are telling us. Now, I use technicals just for perspective, nothing more than that. Not whether it's bullish or bearish, whether it's buy or sell signals. I don't use technical analysis for that at all. Well, so when I looked at it, I looked at the 20-day moving average. With the stock trading at 73, the 20-day is coming in at 75. So you got what I call the trend moving average above where the stock is trading. The stock has been beat up over the last 2 months, coming well off of its highs. It needs to really get some movement to the upside. And with this potential news and headlines, this could be a potential catalyst to the upside. The 50-day moving average is what I call the institutional moving average, is at $80.48. Again, with that moving average above where the stock is currently trading, I don't think institutions are going to be biting this unless you start to see a huge motivation to get back in the stock, because they're in it at much higher prices over the last 2 quarters. Finally, the 200-day moving average. That's my long-term support or resistance level. That's at 82.18. That means there's a whole lot of traders, institutions, investors that are in this stock over the last 200 days at much higher prices than where it's trading now. They're going to need to see not only a catalyst to keep them in the stock, but they're also going to need to see some long-term opportunity that's going to keep them in once they start reaching these critical levels. So Medtronic, what would you do? If you're already in this stock, want to watch volatility. As a matter of fact, I looked at volatility. The January volatility is run at 22.5%. What does that mean for you non-volatility enthusiasts? It means that right now the stock over the last 52 weeks has been volatile right now. It's in the mid-range of its volatility range. It means that there is a heightened expectation that this stock could move either violently up or down. When I see it get into a mid-range of volatility, that's telling me that there's a heightened sense of expectation of potential big movements, either up or down. And it's at 52% on that rank. If I start seeing that rank go up higher, 60, 70, 80%, that's telling me that there is an expectation that this thing could either pop or drop pretty significantly during that time period. In January, they're expecting some movement. So for those of you that have owned Medtronic, you could look at, as this volatility increases, you could look at selling 40 calls against your holdings. If you own 100 shares, sell some calls against it. 25, 30 delta calls are the areas that you could start looking at and generating some income. Now that will cap your upside. For those of you that are saying, I might want to add 100 shares to my portfolio, you could sell out of the money puts, maybe in that 25 delta range, especially if volatility starts to increase. But one thing that you have to understand, why is vol going up? So go understand, is it this headline? Are there other components to this business that you have to actually look into? Dig a little deeper. We'll be watching it here at MarketStream.live, but now you have some transparency. You have a range, basically $4.50 between now and January. That's roughly $44. So the stock could be either at 47 and some change, or 77, 78 and some change, or it could be down to $68, $69 and some change between now and January, the 3rd week. Now that will change as more headlines come out. Next one I want to look at is Edwards Lifesciences. EW is the ticker symbol. Stock's trading at 90.84, another large cap med tech. Stock's up about 1.72% today. The January options that are expiring roughly around 44 days from now are pricing in the potential for this $90 stock to be either up $8 or down $9, somewhere in that range, basically between now and January expiration. So you're either looking at it at 98 or you're looking at it at 82. The 20-day moving average comes in at 86.60. That means that this stock has been trending. As a matter of fact, the last few sessions, it's been trending to the upside pretty decently. The 50-day moving average comes in at 99. So you're going to want to see a challenge of that 50-day moving average to really get institutions starting to think that they're going to want to add to holdings that they probably have already had for quite a bit of time, and specifically over the last 60 days. The 200-day moving average, which is long-term resistance at this point because it's at 103.10. Again, we're going to want to see that get right through. That could be a big catalyst to the upside from a price point. Also, you're going to want to see some volume there as well when it gets to that level. Vol is relatively cheap at 33%, so there's not a heightened expectation of big moves. It looks like whatever the trend is, they expect that it's going to continue without any big violent moves, either up or down. But there's quite a decent range in here, almost 10% range going into January expiration for the next 40 plus days. Next one is Whole Logic, ticker symbol HOLX. Stock's trading at 39.16. It's up about 0.5% today. The January options are pricing in the potential for HOLX to move either up or down about $2.45. Now, can that change, by the way? Yes, of course. If the stock moves as days to expiration change for the options, any other volatility movement, if it goes up or down. Right now, they're pricing in the potential that this stock could be either at 42, right around 42, maybe 43, down to as low as 36.37. The 20-day moving average comes in at $38.33. So you have now the stock trending up. It's above that trend moving average. The 50-day moving average comes in at $38.19. You have the stock above that 50-day moving average. So you have the trend, and it's basically anyone that's been in this stock for the last 50 days, you could see that the price action is potentially moving in their favor now. The 200-day moving average comes in at 36.52, so you can clearly see that there's a whole plethora of people that have gotten into this stock at much better prices than where it's trading today. That is a good bullish sentiment indicator. It's also what I call where I would say support is at this juncture. The implied volatility is running at 22.9%. That's basically putting it right in the mid-range, right below the mid-range for implied volatility over the last 52 weeks. So there's not a heightened expectation of big moves, but again, we're going to watch that closely. You start seeing that implied volatility go up, in other words, get into that 50, 60, 70% rank, as I call it. That could mean that there could be some bigger moves. We got to find out. Is there earnings? Are there headlines? What's going on with this sector? What's going on with the name? And then finally, we're going to take a look at Zimmer Biomet, ticker symbol ZBH. Stock's trading at 105.06. Right now, it is up about 0.5%. As a matter of fact, if I take a look at, and I'm actually going to take a look at ZMH real time. Taking a look at ZMH right now, excuse me, did I say ZMH? I said ZBH. My bad. Taking a look at ZBH right now, the January options are pricing in the potential for the stock to move either up or down about $6.60 on this $105 stock. So you see them basically about a 5% move being priced in for the next 42 days. That's a pretty interesting move. We'll take a look at the moving averages when we get an opportunity. But right now, you're seeing that vol is running around 22%. That's on the lower end, lower third, so it's about in the 30th percentile rank as far as vol, so there's not a heightened expectation of movement. But again, as these headlines, as the policies start to come through, you're going to start to see that these stocks could be moving either up or down. But now you have a range, you have some concept, support, resistance, trend analysis, and now you can take these headlines and start making some investment choices with greater transparency. All right, folks, that's it right now for Strategy Now. With that being said, join us for Tech Talk at 3:30 Eastern Time. That's where we're going to be covering all of the different charts and also option pricing opportunities that will give us better transparency into what the potential moves are on some key stocks. We're going to look at stocks that have earnings after hours, as well as sectors that are on the move. Specifically, we're going to start taking a look at the oil and gas drillers. They've been on the move like crazy today. So we'll talk about more of that at Tech Talk at 3:30 Eastern Time. See you then.